Hey guys, today we're going to be talking about strategic nonprofits and more importantly, how you can use them to save money on taxes. Uh, we should all know that the one structure that all billionaires and elite family offices have is a private foundation, right? It's so key to their success. I do not know of one billionaire who does not have some kind of foundation. And they are not using this for the amazing charitable purpose as they would lead you to believe, but they have additional ways to use this powerful structure that we're going to get into right now on this video. Bottom fact of the matter is that you're likely overpaying on taxes, right, to the tune of 93+%. And we can show you how to reduce that down significantly by using this one structure. Most people are using loopholes, which is fine for people that are paying maybe a couple of $100,000 a year in taxes or less. But when you start getting to those higher levels, above $300,000 a year in taxes, the basic loopholes will not cut it for you. We've actually got a list of the top 50 loopholes that everybody should be using. So if you're interested in that, we'll link that below. But that's free because they are all basic. So if you are not making over, if you're not paying over $300,000 a year in taxes, then use the loopholes first. You don't need to go to any advanced fancy structure. You need to get all those loopholes active. Make sure your CPA is using them and rate your CPA against them, right? So you'll have this checklist of 50 loopholes. Send it to your CPA and ask him or her to check off each one of these that you are actively using. And if you're not using them, then you want to know why you aren't using them, because you can save yourself a lot of time, effort, and money by using those loopholes. But if you're making too much money or paying too much in taxes, let's say over 300,000, then this video is for you. Stick around because we're going to get into more advanced structures that can get you down into single digit tax rates. So, speaking of single digit tax rates, these elite billionaires, we've all heard, we've seen the articles that they pay little to no tax, and they can pay legally as little as 3.9. Let's round it to, sorry, 1.9. Let's round it to 1.4 just to make things easy. Tax rate by using the private foundation that I spoke of earlier. So this really is a very powerful structure to use when used properly, when you know how to do it properly. This is very, very powerful. So how that applies to you is if you set this structure up and you can use it efficiently, you can stop overpaying on your taxes. And that's the key, really, of everything that we want to show you to use nonprofit strategically. Yes, you have to have a mission and a purpose, and it has to be charitable, but there are so many additional benefits that you could get by using this one specific structure. So if you don't believe me, you can go look it up. That 93 is the estimate that we see everywhere percent of business owners overpay on taxes. We took this article from Forbes magazine, but you can Google it and it'll come back in the 90% of business owners that are overpaying every single year. So the likelihood is that you are one of them and you are also overpaying on your taxes. We don't want you to do that. So we're going to give you an advanced system, a structure that you can use to go ahead and save a lot of money. But let's just put it into practical terms, because 93% obviously is the vast, vast majority of people. Let's show you how, with foundation, you could save that money. So in this scenario here, you've got $10 million revenue and a $3 million net profit, and you're paying a tax rate, which is low here, of 25%, right? So in this scenario, you have 755,000 of taxes that are due, but with a foundation, this is how it changes, right? So with a foundation, let's use the same 10 million, the same 3 million. You can donate 30% of that 3 million to your foundation. And bear with me now, we'll get into how it all works in a second. I just want to illustrate the point of how valuable this is. So that would be the $900,000 that you can donate to your foundation, dropping your taxable income down to 2.1 at the same 25%. It's just over $500,000. This gives you an instant saving of 230,000 just on taxes reduced, right? But then the kicker, the bonus is the 900,000 that's donated to the foundation, you still have full control of. So in this one scenario, in this 1 year, you've created wealth of 1.1 million bucks. So just by having this one structure in place and being able to use it correctly or strategically, then that's giving you a $1.1 million benefit. Additional things that you can do if it's not just tax savings on business income that you're looking for, or if you're looking to eliminate capital gains tax, this is a perfect scenario for you, because if you donate assets to a foundation, you get a deduction personally, and then you can still control that asset in the name of the foundation. And then if you come to sell that asset later on in the name of the foundation, there's still no capital gains tax to pay, even in the foundation. So let's wrap some numbers around it so you can understand what I'm going on about. So I'm in California, so we've just done federal, NIIT, and then we added state. So you're going to get to a 37% tax rate in the state of California on those capital gains. But the beauty of a private foundation is there is zero capital gains inside the private foundation. Zero. Don't believe me? Google it. Or ChatGPT it, as I should say these days, right? Then the personal deduction that you would get is 20% of that asset. So let's just say the asset value was $1 million that you donated into the foundation. You then get to use that $1 million on your personal tax return, and you can roll it over a 5-year period, but it can only be 20% of your AGI, right? Then the last and other thing is within the foundation, you can diversify assets. You're not stuck in one asset type, like real estate, as an example. If you do selling real estate and you do a 1031 exchange, typo there, then you don't have to worry about finding a bigger property, refinancing at a higher rate, doing all that within a set number of days, totally limited. You can actually buy and sell whatever asset type you want, free of capital gains tax. So you can diversify to stocks, to crypto, to real estate, to insurance policies, to vehicles, to jets and yachts and artwork and wine, whatever asset type that you like, you can buy that within the foundation. Now, let's run a scenario on the capital gain side, similar to how we did on the business income side. So in this scenario, current situation is you've got $5 million of appreciated assets taxed at that 37% rate. You get a 1.8 tax bill if you were to sell that. In the foundation world, you would donate that to the foundation and get a personal tax deduction of that 5 million. The beauty about this is, whether it's stock or art or real estate, that asset would now be owned by the foundation. So the value is still there. You still control it. But personally, you get a tax deduction of that 5 million as well. So you kind of double dip in this regard, because you can sell it, flip it, leave it in the foundation. You fully control it, but you also get that tax deduction that you can use against your personal taxes over the next 5 years. So that's how you can really create wealth of 10 million, because you're getting the personal benefit of the tax deduction right now, but then in the future, you can still sell that asset, diversify it, keep it, do whatever you want with it. It's just now owned by the foundation, which you fully control. Then, in times of uncertainty, foundations are by far the smartest way to protect and preserve wealth. As we know, we've had a new government come in, and they've mentioned a lot of things regarding taxes um, as they were coming into office and now when they're actually in office. Such things as doubling capital gains tax for the top earners, slashing charitable deductions, cutting off the estate tax gift exemption in half at least, eliminating the step up in basis. So they're talking a lot about taxes and tax reform, and we've seen that right now with tariffs as a phase one and the external revenue service. And then who knows what's going to happen on the internal, but it's a lot of uncertainty there. So it's really, really important that we protect ourselves before any of these changes take place. Some more of those potential changes that will impact a lot of you are the estate tax. Currently, it's at 13 million per person, but in 2026, it is set to drop down to 7 million. So that's going to be a huge problem for even more people because they're going to get taxed on their assets that they give to their heirs and their kids for no reason at all. The step up at death, though, again, the White House has repeatedly discussed eliminating this benefit, which could mean that your kids will owe capital gains on their inheritance, which is totally ridiculous. So, you set yourself up before this all happens, you can totally eliminate it. Charitable giving, again, they want to cap this and reduce the contributions to 28%. So it's only going to affect the successful rich people and, of course, the billionaires. So what we're talking about in a private foundation, it isn't just for the billionaires or the family offices. It is actually for smart business owners that are making money that want to keep more of what they've built and stay fully in control so that they can pass that on and create legacy and generational wealth for their families, right? So you need to create your own private foundation as quickly as you possibly can before all of this uncertainty kind of gets executed and takes place. And for those of you who don't know who I am, Casey Chauhan, founder of Together CFO. I'm a writer for Forbes magazine. I've been featured in Yahoo Finance, Entrepreneur, Fox, NBC, ABC, pretty much everywhere you can imagine, as well as being on top podcasts like Brad Lee and hanging out with cool people like Sam Ovens, Jay Abraham, Perry Belcher, speaking on their stages. So I've been around the circuit a while talking about tax savings and specifically strategic nonprofits. So if you found any value in it, let us know, reach out to us. But we offer a full white glove service of how to set up and create a strategic private foundation. But then the harder part, which is actually the compliance piece to make sure you're fully compliant with all the rules and regulations in the 501c3 world, and then make sure you get bookkeeping and tax filing and consultation along the way so you don't lose that tax exempt status. If you would like to reach out to us, feel free to scan this code on your screen right now. Take a screenshot of it or a picture of it on your phone. Feel free to call the office or text me on my cell phone or even email us, just depending on what you are in the mood for. So hopefully you found value. You've learned a little bit about the power of private foundations. We'll see you on the next one.